Hello, everyone. Thank you for joining me. Today, we are going to look at the Toyama real estate market analysis for 2025. The statistics released for Reiwa 7, 2025, are not just a routine update. They represent a fundamental turning point. We are seeing the end of the growth era and the onset of a structural contraction that will change how we do business in this region. Executive summary. Let's start with the hard numbers. If you take away only 3 things from this presentation, let them be these figures. First, market shrinkage. Total housing starts have dropped by 33.8%. This is a massive contraction, signaling a collapse in purchasing power. Second, capital flight. Look at the investment side. Built-for-sale housing is down 55%, and rental housing is down nearly 37%. Investors are leaving the market. Third, polarization. 51% of all activity is now concentrated in Toyama City. This confirms our core statement. This is not a temporary fluctuation. It is an irreversible reduction in market size. The disappearance of the volume zone. Where did the buyers go? This waterfall chart shows the disappearance of the middle-class volume zone. While wooden houses saw a significant drop of roughly 26%, the most shocking number is the 51.5% drop in non-wooden structures, like steel and reinforced concrete. This tells us that even customers who traditionally sought high-performance, higher-spec homes are being forced to downgrade their specifications or exit the market entirely due to cost. The wall of cost versus real income. Why is this happening? It comes down to this graph, the divergence between cost and income. The red dotted line shows construction costs, materials, and labor skyrocketing over the last few years. The blue line represents household real income in Toyama, which has remained flat. The shaded area is the affordability gap. For the average family, standard new housing is simply no longer mathematically possible. We have hit the limit of affordability. The collapse of the speculative model. This crisis is most visible in the developer market. We see a staggering 55% decrease in built-for-sale or subdivision housing. Developers are professional risk assessors. When they pull back by this amount, it means they are terrified of inventory risk. The old model of build it and they will come is finished. If they cannot guarantee a sale at these new high prices, they simply stop building. The rental market freeze. The rental market is suffering a similar fate, down 36.6%. We call this the yield trap. High construction costs demand higher rents to make the investment viable. However, Toyama's demographic reality, a declining population, caps the potential rent. Landlords can no longer cover their costs with achievable rent. Consequently, the traditional tax-saving apartment business model is breaking down. The Great Divide, geographic polarization. As the market shrinks, it also concentrates. Look at this donut chart. Toyama City now accounts for 51% of the entire market. Takaoka and Imizu take up another quarter. The rest of the prefecture, the others category, is shrinking rapidly. In some smaller towns, new housing starts are approaching zero. We are no longer looking at a statewide market, but a collection of micro-markets, with many becoming construction deserts. The loss of economic rationale in rural zones. Why are rural areas dying out faster? It's a loss of economic rationale. Even if land in rural areas is cheap or free, the cost of building materials and logistics remains high, often higher due to transport distance. In these zones, the moment you finish building, the asset value of the house is often lower than the construction cost. This makes financing difficult and scares away both builders and buyers. Winners and losers in a contraction economy. So, in a market that has shrunk to 2/3 of its size, who survives? The vulnerable players are volume builders competing solely on price. They cannot cover fixed costs as volume drops. The resilient players are those who shift from quantity to quality. These are brands that provide high value, design, performance, and branding that justifies a premium price. Or, they are companies diversifying into high-quality renovations. Outlook. A smaller, more selective reality. To conclude, here is our outlook. End of expansion. The growth era is over. The market is stabilizing at a significantly lower volume, hyperselection. Success requires being highly selective about location, focusing on Toyama City and specifications, value proposition. The strategy for the future is not capturing mass volume, but capturing high-value demand in a concentrated area. Thank you very much for reading and listening. We will continue to monitor these macroeconomic indicators to provide you with objective market analysis. Please like and subscribe to stay updated on this changing landscape. Thank you.